What's up, guys? How are you doing? So welcome again for we're talking about matters finance, matters investment, matters entrepreneurship. So I'm here with
Brian Angwenyi.
So Brian, again, welcome to my platform, and also thank you for accepting my invite.
Thank you so much, man. I appreciate being here, actually.
Yeah, so we just want to talk about investment. Maybe people can make wrong choices in investments. Maybe we have some rules on how to invest, and maybe like you have analyzed the market. Maybe where a person can consider, maybe can get, okay, let's say like data, maybe data to make his or her decision about investment, and which market a person can prefer to maybe to invest. So let's start with any that you have prepared for us.
About the lifetime plan investment. Let's begin by how you approach the markets. So basically, coming into the market, you need to know about three basic rules of the market. Understanding yourself before the market. Number one, the cognitive. Oh my God, why am I saying this? Cognitive understanding. This is whereby you understand yourself. You understand the innate power within you. This is whereby let me say I'm giving you $3. $3, right? And I've told you to go outside there and spend it on something. How can you spend it?
So $3. That is about how many?
300 shillings.
300 Kenyan shillings.
Yeah.
And go outside, like to invest or to do what?
No. To do anything.
Anything.
You're spending on it there.
So $300. First, I'll go and buy chapati. Because of a love of chapati. That is Baraka Rescue. Then I think the remainder, I think for emergency, just be there for emergency.
All right. So now let's come into investments now. You have been given $3 and you have been told that this money is going to double in a day, within the next 20 days. That's what we call what? Compounding effect. Understand me?
Yes.
This is majorly focused on Warren Buffett. I think you've heard about Warren Buffett actually.
Buffett,
He's one of the modern day best investors. I've actually interacted with his books and biography actually. So I'm giving you $3 and I tell you today that this money is going to double daily in the next 20 days. Understand me?
Yes.
Now, in the 20 days, $3 is going to give. Actually, it's a lot of money. Actually, it's almost 100 million Kenyan shillings. If you double it in the next 20 days, compounding effect. Compounding effect. What am I saying about compounding effect actually? Because most of the times the new investors in the game, they don't know about how to approach the market. Understand?
Yes.
They think that by buying the stocks, they buy the stocks which have less value, and they think that it can give them money in a short period. So that is the effect people are facing in the markets.
Thank you for coming back. And those who are new subscribers, guys, this is the time. Yeah, because here we have good things. Yeah. We mean good life for you. So hit that subscription button below. It's where? Here, I guess. So, and turn on the bell notification, and also you can share with your friends. So Brian, so we are talking about investment and smart investments. Let's continue.
So investments, I'm going to discuss about, in this second bit, I'm going to discuss about the tax effect on your money, because the rules of the game, they are meant to keep you poor. Understand me? They lie to you that we are protecting you, but the real sense of it, they want to keep you poor. Why? Because look at the most people who are rich in this world. Elon Musk. Elon Musk, Jeff Bezos, they pay less taxes than their employees. So the secrets about money.
First, do you have, is that a fact or a rumor?
That's a fact, actually. We know it. It is written all over the social media and everything. So the secret about getting a lot of wealth in your life is to know how the rules of the game are played, actually. Remember, I'm not an expert to advise you on this thing about taxes, so take care about that one. So first of all, before you enter into the game, you need to know about how to go into the taxes and how to invest in a smart way so that your wealth can accumulate over time until the goal you have reached, actually. So, for me, I cannot give you my secret, actually. You need to buy that.
How much?
Okay, let me give you a secret a little bit about this one. Most of the people in this world, the best stock traders in this world, because my area of specialization carries about trading at large, actually. So, investing about the stocks, you need to go into the US stocks, actually. The US stocks. That's where the real deal is, because most of the Kenyan stocks, they move in a total space option storage. So let me say US 500, NAS 100, and US DAX. People invested in this thing in the 1970s with $30. Right now they have almost $100,000. That's almost 12 million Kenyan shillings. Look at that. 12 million Kenyan shillings. Within what period? 30-year period or 40-year period, actually. So you need to choose your area of how to approach the markets. Like for me, I've chosen the stock markets. You understand me? So if I buy right now with $100, the government is not willing to tax me for the next 30 years or something of the sort, because this is a retirement plan for my life. So I'm investing $100 in this thing with a projection that this US 500, stock is going to move from this level to the next level, because US 500 is a basket of almost the top 500 companies in the US. Understand? So there is a guarantee that it's going to perform better. But now in the second phase, you are employed in Kenya. When I say that, you are earning 300,000 Kenyan shillings. That's almost $3,000. Yeah? The government is taxing you per month 30% of the money. 30% of 300,000 is almost you are getting 270,000. 300,000. So the money you're taking home after tax and after the deductions and everything can come up to 240,000. Actually, let me say that. You're taking home 240,000. And after that, the government is going to tax you additionally in this thing known as what? VAT and everything. Understand me? Now, if you calculate this money you have lost to the government, you have provided the government. I'm not saying that you do not want to provide to the government. You have to do that, my friend. Even me, I pay taxes. Pay as you earn. I pay taxes, actually. So, if you compare between these two things, in the 20-year period, the money that you invested in the stocks is going to be much higher than the salary you have accumulated over time. Exactly, that's the point now. Now, the real deal comes down to this one. This money you're going to withdraw from the stock trading account is going to be taxed only once. 30%. Understand? So, if you have earned $100,000 over the 20-year period, they cut you 30% of the money. You'll be getting almost
70, like 70,000.
7,000. That's what you are getting, right? That's your money now. If you compare $70,000 with the money you got over time from this one, remember you are doing, you're investing in your savings account without even particularly focusing on something which can grow over time, because the rule of being an investor is to be the owner of the economy, not to be the consumer of the economy. You cannot win in investing by just saving. You can never win. You must invest in something which can accumulate over time. You see that, okay, well, I'm investing in something like I'm buying the stocks. This money is going to accumulate over time to give me something whereby I know that if I have invested 50,000 into this one, 10 years, it's going to give me almost what? 10 million. That's the secret about investing. But now let me say you have invested, you have saved your money in a saving account in the bank, the local bank. You know, so the rates per year, they are almost 1%. That's what, 1%. In the end of 10 years, you are nothing compared to that. Remember, you are withdrawing the money because you see the money. The money will be less. Now, that's the secret about investing. You need to know the rules of the game. Secondly, about investing, you need to know about making the right decisions about investments. That's the rule number 2 about investing. Number 1 is about access, actually. Number 2 is to know how to make the right decision about investing. Let me say now you have decided to focus on education. So we're focusing on, let me say, a course. What can I say now? Which course is that? Well, a software engineer. Let me compare a software engineer and a person who have done something like communications. You are investing in your life. That's education investment. That's a type of investment, actually. So we all know that the person who has studied software is going to be of much value than a communication person. Right? So if you know how to make the right decision of your life, is to invest about the right investment of your life, actually. So the person who have decided to go into the software engineering course and invest in his education course of software engineering is particularly or major going to be of higher value than a person of communications. You understand? So making a right decision in your life is much important than investment. Stock trading. A person has told you want to invest in Tesla, Amazon, Apple, Facebook, which is nowadays actually it's known as Meta or something like that. So it's up to you to analyze the markets actually to see which one is performing better than the other one. If Google is performing better than Tesla, invest in Tesla. Invest in Google, If Facebook is performing better than Google, invest in Facebook. Meta. So you need to know how and everything moves, analyzing the markets. That's the topic. Now, let me go to the last point about investments. 3. Just do it. Invest it. Enjoy it. And share it. You know, we are not chasing money. We are chasing the freedom which comes from having money. Understand? And having money does not change who you are. It shows who you truly are. Understand? Even as a fellow, I can say that you are an extrovert, right? You like going out.
Not really, but I try, yeah.
You like going out. Money cannot change who you are from going out. Let me use myself as an example. I'm an introvert. Let me say 3 years ago, I usually say that if I get money, I will be traveling the world, you know. I'll be going to Mombasa, enjoying myself. I'm not rich, but I can say the moment I got money, nothing changed. I'm indoors, doing something I like, sitting behind the computer, analyzing the markets. It never changed me. Money does not change your personality. It shows who you truly are. If you like helping people, understand? Money cannot change that perspective about you. It just shows you. That's why you see most of the people like Bill Gates, they have the foundations to help people. They have the foundations. Money, it vibrates, it increases, it expands the scope of how you view your life actually. your characters and everything. You help people, you can create a foundation through the money to support people. That is the point about investments and everything. Yeah.
Okay, so what's up, guys? What's up? Okay, hope you've enjoyed our today's session. So we have reached the end of matters investment and the right decision and the rules, for investment. We have been told that focus on like a retirement benefit, like investment for the future. Don't focus now.
Exactly.
So if you're investing, invest for the next 10 years, like the value of money for the next 10 years. Because the return that you'll get after investing now, then you drew the money when you have returns, then after sometimes you invest, it will be compared to that one of a 10-year plan. Actually, it will be less. So plan better, have a better investment plan. But above all, be smart, and focus for the future. And we've been told that money doesn't change who you are. Actually, it shows who you are.
Exactly.
So use your money wisely.
Right decisions.
Make right decisions, and also share with me that money. Oh, that one was awesome.
Oh, wow.